All right, let's dive right in. Today, we're breaking down Snowflake's monster second quarter earnings report for fiscal year 26. And wow, did they deliver? The company absolutely smashed expectations and raised their guidance, which sent a massive signal to the market that their huge bet on AI, well, it is really starting to pay off. So let's get into what that actually means.
And what a signal it was. I mean, look at this. In after-hours trading, the stock just rocketed up 12 to 13%. The market didn't just like what it heard, it loved it. We're about to show you exactly why. You see, this was so much more than just a simple earnings beat. This was the proof everyone was waiting for that Snowflake's whole AI strategy is moving out of the what-if phase and into real, tangible dollars and cents. The big question we're answering today is, how is AI actually making this happen? Okay, first things first, let's look at the top-line numbers that got everyone so excited. These are the big figures that made Wall Street sit up and pay very close attention. So how'd they do against expectations? Well, they didn't just beat them, they pretty much crushed them. Non-GAAP earnings per share came in at 35 cents, way ahead of the 27 cents analysts were looking for. And revenue? It hit $1.14 billion, sailing right past the $1.09 billion expected. That is some serious growth. We're talking 32% year over year. And when you dig a little deeper, the company's health looks incredibly strong. Their remaining performance obligations, or RPO, which is basically a snapshot of future revenue they've already booked, jumped 33% to $6.9 billion. On top of that, they now have 654 customers spending over $1 million a year and a super healthy net revenue retention rate of 125%. Let's talk about that NRR number for a second, because it's so important. A rate of 125% means that if you take all the customers they had a year ago, those same customers are now spending 25% more. It's a huge sign that Snowflake isn't just winning new clients, they're getting their biggest accounts to spend more and more. That's a powerful business model. Okay, now for the real heart of the story, the AI growth engine. This is where the rubber really meets the road, where Snowflake's long-term vision is finally turning into real money, and, maybe more importantly, new customers. You don't have to take my word for it. The CEO, Shredar Ramaswami, laid it out perfectly on the earnings call. He basically said, AI has gone from being just a cool feature to being a core reason, a primary driver, why new customers are signing on the dotted line. And the numbers? Oh, they absolutely back this up. Get this. Over 6,100 accounts are actively using Snowflake's AI features every single week. This isn't just people kicking the tires. This is deep, meaningful integration. In fact, that integration is so sticky that AI was the deciding factor for nearly half of all new customers this quarter. Just think about that. 50%. That's a massive sign of where future growth is coming from. And even for their existing customers, a full quarter of all the projects being built on the platform now involve AI. That tells you just how deeply these new tools are taking root and how much value customers are getting from them. So what's driving all this adoption? Well, it really starts with what they call the product flywheel. The idea is simple. Rapid innovation directly leads to customers using and spending more on the platform. And man, have they been innovating. The company is shipping new products at an incredible speed. We're talking about 250 new capabilities in just the first half of the year. Big releases like Snowpark Connect for Spark and Snowflake Postgres are just blowing the doors open on what you can do with the platform, making it a no-brainer for more and more developers. You can see this product's strength paying off in their multi-cloud strategy too. For instance, Microsoft Azure was their fastest-growing cloud provider, up 40% year over year. This just proves that Snowflake is successfully meeting customers wherever they are, and it's grabbing a bigger piece of that massive cloud spending pie. So, Q2 was obviously fantastic, but what about the road ahead? Well, management signaled a ton of confidence about the future. Let's take a look at their updated guidance. Okay, so Snowflake raised its full-year product revenue guidance to almost $4.4 billion. But here's the really interesting part, the part that signals true confidence. They didn't just raise their forecast, they raised it by more than the amount they just beat estimates by. To an analyst, that's a huge sign that they believe this momentum isn't just a blip, it's here to stay. So let's put it all together. What does this all mean for investors? And what should we be looking for in the next quarter? Here's the official Talk Ticker's take. This is really the billion-dollar question now, isn't it?
After a quarter like this, and with the stock popping so much, all eyes are going to be on them. Can they keep up this incredible level of execution and keep this AI growth train rolling?
Our verdict is clear: outperform. The things you absolutely have to watch in Q3 are the adoption rates of new products, like Snowpark Connect, and whether these strong spending trends continue. If they do, we can easily see a path for the stock toward the mid-200s as the market fully prices in this new era of AI acceleration for Snowflake.
And finally, just for fun, let's look at a potential trade idea based on all this. It's built on a theme we're seeing all over the market right now, which is this flight to quality in the world of AI infrastructure. The idea is a paired trade. You're making two moves at once. You go long on Snowflake with a call spread, say buying a fiscal 27 $250 call and selling the $350 call to keep the cost down. Then you fund that by shorting a less innovative software company that just isn't showing the same kind of AI progress. Basically, you're betting that the AI leaders are going to keep winning and the laggards are going to get left behind.
And as we always say at the end here, a quick reminder: this is for informational purposes only. This is not financial advice.